First of all, thank you so much, Dinesh sir, for accepting our request to join us and allowing us to host you. This is truly an honor. Of course, for our audience, I think a lot of people would here already know you, but for those few who do not, Dinesh sir is a technical trader, and he has over 20 years of market experience. And he's, if I'm not wrong, sir, you follow Ichimoku patterns and harmonic trading patterns,
Yeah.
and yeah. So this is so great, and we are of course going to discuss about stock markets. We're going to try to learn from him as much as we can, and this is going to be amazing. I'm so excited for it. सर बिल्कुल शुरुआत तो लेट्स गेट डाउन टू इट शुरुआत तो ऑफ कोर्स एक ही चीज से हो सकती है दैट इज मार्केट्स एंड आई थिंक आफ्टर अ लॉन्ग लॉन्ग टाइम फाइनली आज मार्केट ने कुछ अच्छा सा ग्रीन दिया है बट दैट ऑल्सो काइंड ऑफ लुक्स अ लिटिल स्केप्टिकल राइट नाउ थोड़ा सस्पिशियस लग रहा है कि ये जाएगा भी तो इज इट अ डेड कैट बाउंस और इज इट व्हाट इट इज I would love to know your thoughts on the market, what is going on, and what does your analysis say? What is going to happen in the coming few days, sir?
Yeah. So first of all, thank you for having me over and giving me this honor to speak among the the viewers and listeners, followers, and sharing my view and my journey in markets and all that. So I completely follow Ichimoku and harmonics. These are my two primary studies, or based on which I come to a conclusion on trend, on a trade identification, be it as an investor, a day trader, a swing trader, whatever. Besides that, the other studies just complement and go with it. But these are my two prime ones to go with, and that's what I've been trading, I've been teaching, I've been mentoring, along with trading psychology and risk management to many people. Last few years, number is huge there. So now coming back to market, on the over the weekend, I had suggested through YouTube that I was a guest speaker at one of the events, one of the channels, where I suggested that now is not the time to go short. The risk reward for a short over the weekend had become horrible. It was just because most of the stocks, number one, were at support, and sector indices as well as stocks had started giving bullish harmonic patterns. Plus, many stocks had started making very small candles, instead of the large ones after the Thursday fall, which was the overnight Fed reaction, which was actually very well known that they would go by a 75 basis point hike. But overall, the scene was looking very good for a turnaround. And I had said that if it, you just have to wait for confirmation above 15,350, just go for the long after that. The first target almost done today of 15,750. If we climb above this tomorrow, we are heading towards 16,100, 200, and so on, till 16,500 also. Now, for your second question, whether this is just a dead cat bounce or a proper reversal, it's too early to call a reversal. Number one, but the probability of it being one is very high, quite high from here onwards. If we start moving up, that's why my suggestion is to take one level at a time, and on the other hand, supposing this turns down again, say from 15,800, or say even say 16,000, if it moves down, the downside is extremely well protected at 15,000, 14,500. So there will be that time again, there will be aggressive buying income. I personally do not see this market going below that 14,500, 15,000 level. I am expecting a turnaround, which, uh, like I said, once it goes above the 16,800 barrier, will give us a new high. That's my bullish outlook from here onwards in the markets. Yeah.
Right, right. Perfect, sir. Sir, you briefly touched upon it, but if we can, do you also expect any sectoral rotation happening in the coming days, like on or in this
Yeah.
upward journey from here on?
Yeah. So over the weekend, I had suggested that IT was looking the best for a bounce, and IT has given a phenomenal bounce in the last 2 days. I expect CNX IT, that's Nifty IT, to go up to 32,000 over the next few months, or say, I would say months, I wouldn't go into weeks, say by Diwali, 32,000, as long as it protects the low made on Thursday. that low needs to be protected by CNX IT. So the risk reward for IT is fantastic. It's given a super duper rally in the last 2 days. Any dip in IT is worth an entry for that 32,000. Not looking at a new high in IT stocks, but definitely a decent bounce coming, especially from the large caps. Infosys, TCS, Wipro, all the big names should definitely give us a good bounce in that sector. Then there is a very good bounce coming in pharma sector. There is a bounce coming in metals, and from today the FMCG sector is also showing a very strong upside move. So I personally cannot see any sector which could be labeled as terribly weak right now. Right now, no, not a single sector. So one by one, sectors joining the party from here.
Right, right. So, do you also track any macro environmental factors while you do this analysis, your analysis?
See, as a person who only sees the technical side, not the fundamental aspects of the thing. So I have my own strategy of a top-down approach from from the point of view of macro picture. For us, macro for us technical people, it is the monthly, weekly chart, and overall all the parent, the sector charts, what they are saying, what is the Nifty saying. So we look at it from that angle. Not just that, we look at the PE ratio of Nifty, we look at the price to book ratio of Nifty, we look at the breadth, the advanced decline breadth, which was at historical low levels last week. So whenever those levels come, the market gives us a bounce of 7 to 10%. I am talking in terms of Nifty. In terms of stocks, the bounce is much bigger. Number two, the PE ratio is at 19 today. Now, when was it 19 last? It was in June 2020. That low. So we are definitely at an extremely low level. Valuations are extremely low right at very juicy valuations right now across the board. Not just from a trading point of view, even from an investor point of view. This is a phenomenal level for entry.
Right, right. Perfect, sir. So,
Mm.
there's one more aspect to it,
Yeah.
which is like a lot of people, including even me, we are the COVID stock market generation, which
Right.
we enjoyed that heavy bull run, and we have not really seen those, bear markets, or like technically, I think it's the 20%. If the market falls below 20%, then it's called bear, and it's not so far fallen 20%. But still, it is a big fall for
Yeah.
my generation of stock
Yeah.
market.
Yeah.
So, given that how experienced you are, I would love to know how did you deal with this one? How did you deal with this
Mm.
dip,
Mm.
like this correction? Were you out in cash? Were you still bullish on your companies,
All
or
right.
what kind of stop losses did you
Yeah.
take? And second, now that like in case this continues or happens, so what would be your strategy going forward from here?
Right. So, first of all, a bear market, bull market definition of 20% is, very redundant. It's an ancient way of looking at things. Why? Because especially in our markets, that is in India, the index is brilliantly managed. Okay, when a stock takes a sharp correction, it is removed from the index, and a stock which is outperforming is bought into the index. Hence, you do not feel the hurt in the index. Plus, there is phenomenal management of sectors. Like when bank will go down, IT will go up, or vice versa, or Reliance will come to the protection of the index. So an index fall, say from this 18,600, we've come down to 15,100. We saw a 3,000 point fall, but stock terms was a major fall. Almost every sector took a hitting. So don't look at the market from that angle that this is a bear market or this is the bull market. Okay, you have to see from a bigger picture that from 2020 March, that is the COVID low, till 2021 October, that is Diwali, we did not see a single correction in the market. Minor drips here and there happened in terms of time as well as price. Okay, so this was an overdue correction which took place. Okay, corrections are good. They give you an opportunity to enter the market. That's the first part. Now, for your second part, how did I approach the market from October last year? For post Diwali, I had stopped buying stocks in cash, which were for my medium to long term purpose. I had come down in my portfolio to 60% stock, 40% cash, which is my long term holding view in stocks. And opportunities here and there were there, but I did very little cash buying of stocks. You can say hardly 10% in the last few months. It was more of trading through derivatives, long and short, which were taking place because I was not confident of a bigger window of reversal than which I am currently. So now I am looking at buying in cash for a bigger. For me, buying in cash, the difference between derivative and cash is that in general difference is that derivative you are leveraging, you are taking a higher risk. Cash, you are putting your own money. That's one definition of the financial market. But from our point of view, when I say I want to buy something in cash, I am looking at a horizon which may be more than 1 week, 1 month, maybe more than a quarter also. So where I am more comfortable buying in cash and trying to hold it for a bigger return. So that's the kind of market pulse I'm getting now. Worst scenario for, like I said, 14,500 for a cash buy. Okay, that's 1,000 points. Good scenario, I'm personally looking at a target of 19,500 to 20,000. So in terms of risk reward, I don't want to miss out on such opportunity. See, never try to find a top in a market or a bottom in a market. Once you have the conviction that you are near a bottom or near a top, wait for a reversal confirmation. Get in after that, like that. Start your slow accumulation, and as the confirmation comes, keeps getting better for in your favor. Get more aggressive. Get into a pyramid, a reverse pyramid. Add more as the rally gets stronger out there. That's how I'm looking at the market. Yeah.
Right. Perfect. Perfect, sir. So, may I also ask, like, do you follow any fixed stop loss systems, or maybe do you to simply go by charts? So it's stock specific
Yeah.
stop loss.
Yeah. So first of all, the stop loss for me in term has to be in terms of technical analysis, right? That's my first and foremost golden rule that unless the trail is not hit, the trade is active. Okay. Of course, if a target is achieved at a for a buy at a resistance or for a short at a support, that's one way to look at it. The number two aspect is that where most traders and inclusive of yours truly has learned a lesson through a lot of bad scenarios is that we tend to look at the reward. We never look at the risk. We have this habit of seeing, if I buy here, I'm going to make X amount of money, X percentage of return. We don't look that at the aspect that if I get it wrong, how much am I going to lose here? So it's actually supposed to be vice versa. Your margin of safety, like the way Warren Buffett puts it, is very simple. That how much are you going to lose if you get it wrong? And we tend to get it wrong. It's very normal to get it wrong. But before you enter into a trade, you should know the percentage of loss to your capital you're going to get hit if you get it wrong. So never put everything in one basket, spread it across, do scattered buying or do have a wider portfolio or wider shareholding of different stocks, and always measure your risk, how much you can afford to lose in a particular trade. See, the chances of one trade making you a millionaire, billionaire is 1%. One out of 100 such scenarios will happen. But the chances of one stock in which you have a trade going wrong and wiping off half your capital or more than that, or any percentage, a large chunk of your capital is more than 70%. So never do that, never. So my first rule is, as per the charts, what would be my stop loss? Then the second is, how much risk can I take in a particular stock? Then the quantity is decided, and according to that, I move ahead. I don't. It's very important on everyday basis to remind yourself that do not get lured by the reward. Be aware of the risk and move ahead like that. Yeah.
Right. Perfect, sir. Brilliant. Brilliant, sir. Sir, of course, now that I have you here, I would also love to hear a little bit about uh, Ichimoku technique.
Hmm.
Harmonic levels, I have some idea, but Ichimoku में especially क्या होता है? In your words, if I can have a small glimpse of it,
Yeah.
that would be amazing.
So Ichimoku is a Japanese study. It's based on certain specific moving averages as per the developer of the study, Goichi Hosada, 90 years back. So in 1930, he developed the study, and by the time it was ready, it was 1960. It's based on the moon cycle. It's based on certain crucial numbers. Okay, so Ichimoku not only does it, it's a study on its soul on a whole universe of whether we want to look for an uptrend, downtrend, support, resistance. That's just primary aspect which other studies also give you. The unique part about Ichimoku is that very few studies like it calculate the time of a trend. So we are able to calculate the approx time a trend will survive. Price is just a consequence thereof as per the study. So if supposing say for this correction which started in October last year has a time expiration of say end June or end July, okay, this calculation comes into effect very early. So for these many months the price can move from 18,600 to 14,000 or 13,000 or say 15,000, wherever. That is just a byproduct of the time, that this is the time correction happening. So we get that advantage. Plus, there are other advantages also of the way they have the constituents of Ichimoku. There are 5 constituents. Each one has its own unique ability, and we look at the combined picture to come to our conclusion on how it's moving, on how whether it's a bullish signal, whether it's a bearish signal, whether it's a time that momentum will be super fast now or momentum will be sluggish, sideways market. We get all those signals and we work on that aspect. That's what I have been practicing now from 2014. Plus, I've been teaching the same thing through my webinars for the last 3.5 years. Yeah.
Right, brilliant. Sir, एक question हम लोगों को, so I had pinned a tweet in this space
Hmm.
asking people to put up their questions. One of
Hmm.
the questions is all, of course, being where can people find a recording of your webinar? Suhas sir ने ये पूछा है. So do we have somewhere can we find it?
Yeah, so you can send me a Twitter message or an email.
Yeah.
My link email is there, and then I'll
Okay.
give the details for that. These are all paid webinars and all that, so it's at a cost
Yeah.
because these are webinars which are not small. They are webinars which run
Yeah.
into sessions. Recordings are running into 12 hours, so they have been broken
Right.
up into three hours. So you learn the first part, you practice for 10, 20 days, then you see the second part, then you go to the third part. So there's no rushing into the study, because Rome was not built in one day, and you don't pass out when you go to
Right.
a college to become a graduate, say to become a lawyer or to a doctor or even a chartered accountant. You don't just pass out in the first semester, right? So you have to study
Yeah.
for X number of years to pass. So similarly, I have made the entire course in parts of 3 hours to grasp each and every aspect to make the foundation stronger. Yeah.
Brilliant. Sir. And sir, the best way to reach you is your email that is there on your profile.
Yeah,
Your
yeah,
profile
email
details.
or but Twitter Messenger, either of the two.
All right. Awesome.
Yeah, yeah,
Awesome. Awesome. Great, sir. Thank you so much for that.
yeah, yeah.
Okay. So we have some more questions. So I think I have a lot more questions to you, but I think audience gets primacy. So
Yeah.
let me cover their questions first,
Yeah.
and then maybe I'll ask my rest of the questions.
Yeah.
Okay. So one of the questions is by Srini sir. He's asking, what is your view on Titan post RJ exit? There's a news that Jhunjhunwala sir has exited Titan.
Yeah, that news
In
came
case you're
yesterday. So again, see, as an
yeah.
analyst, we don't look at news. Okay, see, news is mostly discounted. In 9 out of 10 scenarios, you'll see news is discounted. Market moves well ahead of anything. Say, for example, our Nifty topped out in October, but the inflation fears and the Russian-Ukrainian crisis came much later. Russia, of course, Russia-Ukraine triggered the acceleration of the fall, but the market had started already wobbling that interest rates would go up, the economy globally would get hit at that. So markets discount things 6 months to 1 year in advance. Always remember this. And some news, of course, are all of a sudden which react to us. So that's another. That's coming back to Titan. Titan has got very good support around 1800. Excellent support. That I would say that 1800 will work like a fantastic bounce area, which already it gave a signal today, right? Today and yesterday it gave a fantastic signal of that particular move in the market. So if you are a long-term investor, then you could do your SIP downward. I would say till what do you call 1775, 1800, and on the upside, uh, I would say yeah, above now, because if you have not entered till now, then wait for at least an hourly close above 2100. Wait for an hourly, so you might get a pullback to around that zone. You can consider entering then between 2100 to 2000 in that sense. And initially, I would keep my target at 2300 and then at 2500, 2325 for now for now. I wouldn't keep a target of all time high so fast. I'll keep a target of 23 and 25. Yeah.
Awesome. Brilliant, sir. Thank you so much for that, sir.
Yeah.
Okay, next question, sir. Pankaj sir ka hai. He's asked regarding two scripts, Asian Paints and Pidilite.
Okay.
His question is basically regarding these high PE blue chip scripts.
Yeah.
And he says that though he holds a strong conviction in both, but the fin tweets handles are telling to short it.
Oh,
So what is your view on it, sir?
Asian Paints is not a short at this level. Definitely not at this level. It's at a phenomenal monthly support of 2,550. I would not short it at this level at all. You want to short it, you need to wait for a bounce all the way back to probably to I would say 28.50 if you want to short it. Else, no. It looks like on the daily, it looks like a kind of a double bottom scenario trying to bounce back. So a bounce back till 28.50 to, you could also see a pullback in this all the way to, yeah, yeah, 2900. And best scenario I would put right now is at 3,100, like that. Definitely not here. Small C, one off day here, there is a totally different question. I don't want to get into that very small play of intraday or BTST, STBT kind. But overall picture, no, definitely not a shot at this level. Yeah. The other one was Pidilite, right?
Right. Yes, sir.
See, there's one thing you should know that in the market, the heroes of one trend are the laggards of the next trend. Okay, so Asian Paints, Pidilite, these were the stocks which gave a phenomenal bull run. Even during the COVID correction, they did not correct much. Okay, there was very nominal correction in both of them. So overall, yes, you can say that there is a their time-wise correction. Maybe they will not.
Hello.
Yeah. Hello. Can you hear me?
Yes, sir. Your voice broken. Yes, now I can
Yeah.
hear you, sir.
Yeah. So both of them could be overall, I would say, medium term point of view. Medium, they might have started off a correction, but in the short term, in my definition of short term is not less than 2-3 months. They are not a short out here. Pidilite, I would expect a bounce back to 2,200 at least, till all the way till 2350, 2400. Again, not a short. Definitely not a short now. Both of them.
Right. Great, sir. Thank you so much for that, sir.
Yeah.
Okay, sir. Next question, Suhas sir ka again hai. How do you gauge momentum in your analysis? Is Ichimoku alone enough to help with direction and momentum?
Yeah, it is totally. So in Ichimoku study, we have a momentum calculator, okay, which gauges the momentum of the trend. Whether the trend will be now smooth, whether the trend will have a major move up or down, or whether it will be a very labored move and with lots of pauses in the trend. All that we get in Ichimoku. So it's purely on Ichimoku that I do it. Totally.
Right. Great, sir. Thank you so much for that, sir. Next question, sir. Animesh sir ka hai. What is your view on private banks going forward?
Okay, the only sector probably which is still not out of the woods, but again, risk reward for shorting is not very great right now, is Bank Nifty. Okay, the only sector where I would say that there is a little bit of wobbliness happening. But two banks in the entire sector are standing out, which both of them, among the large private banks, I'm using the word large private, that they could give us a very good rally over the next 6 months to a year, maybe even the next 3 4 months. One is Axis Bank, where I feel that worst case scenario is 600 in Axis Bank. Worst. Okay. So near 600, 590, be an aggressive buyer in that zone. And I would be looking for a target of ATH in that all time new high, around 900 to 950 in Axis Bank. That's one bank which I'm extremely bullish at. And the other bank is HDFC Bank. Again, here, uh, the recent lows, in spite of this crash from 16,800, it's the only bank which did not break the recent lows. Okay, it held on to that, which speaks volumes for the strength the bank is having right now. So that's another bank I feel can make an all-time high of 1,800 over a period of time. Both
Right.
banks are extremely strong. The other banks look a bit dicey here and there, but these two, and it's not something uncommon for Bank Nifty. Since the last 1 year, banking stocks have not moved in tandem. Two banks are running, three are quiet or declining. Then there's a shuffle going on between Bank Nifty in terms of movement. Unlike the IT sector, banking is not in unity with each other. One moves, the other trips. One moves very fast, the other moves like a snail, like that. So uh, there is no uniformity in the banking right now. So just these two look like absolute brilliant picks to me.
Right, right. Awesome, sir. Thank you so much for that, sir. Next question, sir. Hiren sir ka hai. What are your views on Nifty PSE?
Okay, yes. 1 minute. See again,
Yeah, sure, sir.
yeah, the bounce yesterday has come from a phenomenally strong support, no doubt about it. But overall, PSE stocks, that 2020 22 was a flavor that PSE divestment will happen and the government is going to sell PSEs. And in a bull trend, everybody wants a chunk of it. That I am a buyer, I'm a buyer. But in a market which has corrected so sharply, people tend to, then look the other way to them, that the government is anyway going to sell, so why should I buy, like that. So very very stock specific PSC ones I like. One is Gas Authority of India, the other is Coal India. Very very specific PSC stocks uh, to get into, and of course BPCL again at very good levels to enter. Yeah. So PSE index could be a bit wobbly, could be a bit sideways like that. Won't be an outperformer like it was in 2021, 2021, like that.
Right. Absolutely, sir. Dinesh Kumar sir ने पूछा था which sector is going to perform and if you can share some good scripts to buy. So I think that we already discussed, Dinesh sir.
Hmm.
Right after this podcast, we'll share a recording. We'll tweet a recording, so maybe you can listen to that.
Yeah.
Okay, next question. Ramji Lal sir ka hai, and he has asked, what is your view on LIC IPO? Which already done in IPO in LIC, but it's gone very low.
Yeah.
I think he has got the IPO and then he's asking whether he should
Okay.
continue with it.
See, most IPOs are overvalued. Most IPOs. So, and the government does it, private sector does it, and we've seen it happen. But when you look at LIC, look at the other insurance stocks. So, if you go to my YouTube channel, I had done a coverage pre LIC of HDFC Life, ICICI Lombard, Prudential, and SBI Life. That how the valuations of each are impacted with each other. They move in tandem with each other. All the insurance companies. So the insurance companies are all bottoming out. The private ones, at least, are bottoming out. But LIC is again a classic case of government divestment and a PSE. So from a long-term perspective, if LIC collapses, so will the private insurance companies collapse, which is not looking so, which is not at all looking like that. They may take a slow move up, gradually moving on their way up, but the future is not dark for insurance companies as such. So LIC would also be a good, but right now there is no buy signal in LIC as in touch as in. right now.
Right. Right. Perfect, sir. Thank you so much for that, sir.
Yeah.
So we have a lot of stock specific questions now. So with any and all of them, whichever you are tracking, please do let us know your views on it.
Yeah. Yeah.
Otherwise,
yeah.
you can skip if you don't track them. Actually.
Yeah. Yeah.
Okay.
Right.
Wasim Shah sir ने पूछे हैं AWN and NCC.
Don't track both of them. Don't track.
Okay.
Yeah.
Then all right. Then we have view on publishing companies like Navneet and Eschan considering the new education policy.
Okay. Navneet. Okay. Navneet Education. Yeah. Uh, no. See, no, nothing positive as of now from Navneet. Okay, is to suggest a buy in it. The support in Navneet is it's at a support, but not yet given a buy signal for me to go long. At all. Not a very convincing buy signal from Navneet yet to consider a long at all. So I'll look at S Chan.
Right. Yeah.
S Chan is in fact at good support. It's at good support right now. So as an investor or a medium term person, also you can keep a stop loss say at 85, 98 right now. You can keep your stop loss at 85. That's a 10% risk in that stock, and consider a long accordingly in that. S-Chan. S-Chan, because the correction is also not so deep in S-Chan compared to Navneet and all. So much better placed.
Right, right. Perfect, sir. Thank you so much for that,
Yeah.
sir. Next, sir, Dinesh sir का question है view on pre-cam for the next 2 months.
Pardon? Pre-cam. So,
Pre-cam.
can you spell it? Can you spell because I don't track it.
PREC. Yeah,
Yeah.
it's okay, sir. If you don't track, I mean,
No,
we have a lot of.
yeah, I don't track this
Okay,
one. Yeah.
great.
Yeah.
Okay, sir. Next is sir LTI and Ultratech.
See, LTI, I do track that stock, but in my view, of course, it's at a very good support. But if I were to select a stock, I would go with LTTS. LTTS is much better placed than LTI. The yield reward, IT stocks are going to do well. There is no doubt about it. But LTTS, in terms of yield terms, if I compare both of them, LTTS stands out better for me. LTI can, the way IT is performing, it has an immediate resistance at 4200 and then 43. Okay, immediate. So till 43, the movement will be very wobbly. Once it takes out 4300, you have a good move coming till 4600. I'm presuming you are a trader. So 4600 is what you would be looking at. And for medium term, then the move goes all the way to 55. 5500. If not 55, then at least 5000, at least above for that 4300 resistance out there. So, but LTTS, much better place for a much higher move
Right.
coming out of that.
Right.
Yeah. Yeah.
Great, sir. Thank you so much for that, sir.
Yeah. Yeah.
Okay. Next, sir, हमारे पास आया है दिलीप सर का question views on Zomato in case you're tracking.
Okay. 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 Zomato. Yeah. See, gave a good move in May, June, and then again doing a pullback at a support. Too early to call it a buy signal, in my view. Too early uh, to call it a major reversal. You can, if you can wait for an hourly close above 72. Okay, keep an hourly close above, not 72, sorry, above 75. Okay, if you can wait till then you have a good move coming in it. Above 75 hourly close. You don't.
Hello. Uh, Hello. I think there's some network issue with Dinesh sir's connection. I'll just get in touch and get back. Right. So I just had a chat with Dinesh sir, and he's just joining back. In the meanwhile, I'll take up some questions are there, which I think we have discussed in the podcast. So Mahesh sir has asked, what's your view on IT sector, especially given the increase in Fed rates, US inflation? So Dinesh sir already discussed that in this podcast. You can hear to the recording as well. But I think he's pretty bullish on it. Yes, yes, I can hear you.
Okay.
Sir.
Yeah.
Yes, yes, sir.
So like I was saying, Zomato, wait for an hourly close above 75. Once you get that, you can consider a long in that. Initial first target would be around 85, and then a bigger target would emerge out of it. Till 110, 110, like that. So just wait for that to happen. Don't rush into it right now. In case you already hold Zomato, and if it fails to hold 50, then exit. If it fails to hold 50, then this God knows what will happen to this company. Then that case, yeah.
Right.
Yeah.
Right. Perfect, sir.
Hmm.
Thank you so much for that.
Yeah.
नेक्स्ट सर दो सेक्टर स्पेसिफिक क्वेश्चंस हैं. विनय राठी सर का डिफेंस सेक्टर पे क्वेश्चन आया है, एंड सपना जी का क्वेश्चन है व्यू ऑन स्मॉल कैपिटल गुड्स सेक्टर लाइक इलेक्ट्रॉन, एलगी पीटी इंजीनियरिंग, एंड ही इज आल्सो आस्क्ड फॉर बेयरिंग कंपनीज लाइक एसकेएफ एंड टिमकेन.
Okay. So Elecon is very strong. It is come in the scanner of also several scanners also. Elecon is super strong. Okay. From yesterday, it's coming in the scanner of practically everyone's as a buy. So this such stocks, and it is approaching its all-time high made in January 2008, just before the subprime crisis. Okay, it's right there right now. So for a few days, it might wobble around that area. Okay, it just doesn't break above it so easily. It might wobble around that area. So hold on to it because it's a cash stock. Try to keep uh, the accumulation zone between 225 to 260 with a stop loss below 180 in that. And stocks which make are entering into all time high areas are usually super strong. That trend remains extremely good and strong. So you should look at a target of 350 400 in that case in this one. Okay, the Elecon is very strong. Okay, so defense, when you look at defense, any particular stocks you have in mind, tell me, I'll look at it like that. So I don't look at defense as a general picture like that, because we don't have a sector analysis like that particularly.
I think I'll go with my portfolio. I have HAL in it.
HAL, that's taking a solid bashing for the last couple of days. HAL. Okay, so again, see, public sector. So a bit wobbly. Okay, public sector means wobbliness possible. See, on Monday it covered a gap up, which was made earlier in the move. So good sign from where it managed to give a smallish bounce to us, HAL. But overall, when you see such a large candle happening in a daily wobbly, so time to be a bit careful in HAL for the time being. We could see a narrowish dip down to 1650, 1600. PSE stocks a bit apprehensive for me that way going forward. Yeah.
Right. So Vinay sir ने question पूछा था. He has also commented. He has asked for dynamic tech if you can check.
Dynamic tech. No, I don't track.
Okay. Okay. All right. No issues, sir. All right. Next, sir, Sapna ji का एक और question था. That was on bearing companies like SKF and Timken.
Okay. So, before I go into these small stocks, see, all these stocks are part of the small cap index. Okay. So, if I were to give a comment on individual stocks, it would vary. So, I would prefer to answer the general overall scenario looking at the small cap sector and tell you that how things are. There are 2,500 stocks listed. Beyond the CNX 500, everything is a small cap. So, I'll look at the small cap sector and I'll tell you what the scenario looks from there onwards to you all, which gives you a proper hint that how the progress is going to be. Of course, each stock will have its own but an overall bigger picture, I'll make it clear for you all. So before let's do SKF, then I'll tell you that.
Yes, definitely.
Yeah. So SKF, again, kind of a double bottom formation happening out here. 1, 2, 3. Yeah. So it might just might come down to 3,000 odd level before it tries to give a turnaround. So that would be an excellent level to enter. 3,000 odd level. 2,000, say near 3,000 to 2,900 is a fantastic time to enter the stock, from where I am expecting the stock to give a new high. Another stock which has got a potential to give you an all-time high, which was earlier high is around 4,200. So again, fantastic risk reward doing an SIP in this. Between now 30 to 50, keep a level of 29, 3,000. Keep doing an SIP. Never try to find bottoms and tops in such stocks. Do an SIP. The risk reward looking fantastic in this. You can keep say, supposing you want to enter now at 30 to 50, and if you do every 100 or 200 bucks you are adding, say till 29, keep a stop loss at 2,700. But look at the reward, 4,500, 5,000 possible in this case. Yeah. So let me do the CNX small cap for you and explain to you what I am seeing in that sector. So CNX small cap index actually topped out way before the Nifty. Okay, their top out occurred in what do you call, in July, August of last year. Market topped out in October. After that, they gave a false breakout in January, and from then they've been coming down in rapid speed, and all the way down they came from there. But again, now valuation wise, fantastic, superb levels of support in CNX small cap index. So small cap index also in major recovery mode from here onwards, but therein lies the catch. There are 2,000 stocks which are small cap all across the sectors. So which one will do better is a very big question mark out here. But overall, small cap recovery is starting from here onwards. They may not initially outperform large caps and mid caps. So say probably for the next 15, 20 days or 30 days, we'll see steady accumulation happening in them. Your first hint will be they'll stop making new lows. Okay, they may not give you a rally, they will stop making new lows. At new lows, they'll give bounces back, they'll start making green candles and all that. They will recover fast if they make a new low. That's your first hint that a bottom is being done in them. Number one, from mid July or end July onwards, expect a robust rally in them. Very robust rally across all small caps. Maybe not now, maybe they will join the party later, much later. First the large caps have to do their job, then the mid caps do their job, then the small caps come into the picture. So good time to start accumulating strong small cap stocks like the one we just discussed, and keep adding and working on them like that. Elecon is already started moving. Another one which is already moving is Apar Industries. They've all come up in the scanner recently, so good movements coming. So I don't see any major bearishness from these levels. If I see 10% downside, I'm seeing 60% upside. So why should I think of being bearish now?
Right, perfect, sir. Thank you so much for that, sir. Okay, next Chetan sir, a question है Nifty monthly Kijun, if I'm pronouncing it correct, in Ichimoku is still far away. So time wise correction might still be pending, and he wants to know your views on it, sir.
Okay, so monthly Ichimoku Kijun is rarely close to the price. Okay, very rarely. That rarely happens, especially when we've seen a phenomenal move in the market. Number one. Number two, that Kijun is not flat. Okay, it's not flat at all. If it was flat, I would have said, yes, there's a decline. And if that person, the gentleman who asked the question, must have noticed that from October till May, that Kijun, the baseline was completely flat, and hence we had the sharp correction. The correction went on in the market. Now that is not happening. So much the more reason for not, looking at downward movements like that. The second part of it is that if he looks at the weekly, there's been a fantastic bounce from support there. Okay, so hence, like I said, that we don't want to get over the board bullish. We keep that target in mind, but we take it level by level. Like I said, 16,100, 16,500, 17,000, and we play. If you are going to sit and think that no, this is a bearish market, I will only enter above 17,000, you might miss the bus. So as an investor, you don't look at the market like that, or even as a medium term trader, you want to be a part of the trend now. This is my answer to that. Of course it will be wobbly, it won't be that fast up, but like days like today won't occur every day, but gradually we are now making a foundation for a rally, very very strong rally, gradually.
Right. Perfect, sir. Thank you so much for answering that, sir. Next question, sir, है Suhas sir ka again. What is your approach to finding stocks that could move significantly for coming days or weeks? Is there a screener-based approach, or do you manually scan through stocks?
I go through every sector chart. Okay, then I compare the relative strength of that sector with the main index, that is Nifty. Then I come to my conclusion of which sector to pick, like that. So it's for me the sector is more important. If the parent is not moving, then how will the child progress? So I look at it like that. So from a top-down approach, and I move in that direction. So the sector, this is what I've spotted in the weekend, that almost every sector had a bullish harmonic. So much the more reason to be bullish in the market.
Right, perfect, sir. Sir, questions हमारे पास बहुत सारे आ रहे हैं, हमारे पास बहुत सारी requests भी आ रही है, but of course we are also reaching a hard stop, and you've been so kind and so gracious in answering all our so many questions. So I would request we will continue this session again sometime if you allow us to host you again.
Sure, anytime. Anytime. Just let's plan it in advance. I'll if I'm not committed elsewhere, then why not?
Yeah.
The whole purpose is to guide a lot of people who want to learn or who want to be a part of the market and all that. We can't spoon feed everybody, of course, but at least give a bigger picture. And of course, all bigger pictures come with a caveat that everyone can be wrong. Everyone is wrong sometime or the other. So that's why it's always important whenever you trade, whenever you invest, please, listeners, my request to you all, measure your risk before you enter. Measure your risk always. Whoever tells you, I tell you, X, Y, Z tells you, anyone tells you, buy this is going to reach a new high, or sell everything, the market is going to crash. First, measure your risk, that what if that view goes wrong? Okay, and then take your decision in the trade. Yeah.
Right. Thank you so much for that, sir. And I think this has been one of my ever favorite sessions where, we discuss, even when we were discussing stock specific questions, there was so much rationale and there was so much learning behind everything. I really enjoyed this session a lot, sir. Thank you so much for that.
Thank you.
And of course, thank you, our listeners, for staying there throughout us. I think we had over 200 listeners listening to us for over an hour now. And so thank you for your patience. Thank you for your love.
Thank you.
And once again, thank you so much, Dinesh, sir, for
Thank
accepting
you.
our request.
Thank you very much. Lovely talking to everyone.